Hello everyone, welcome back to our channel.
Hope you have a wonderful day. In today's video, we're going to talk about home loan mistakes when you have already have your home loan.
We're still doing mistakes. Yeah.
So I think it might be a topic that's somewhat useful for people out there who started their journey when it comes to paying off their mortgage or trying to pay off debt, let's say.
Yeah.
These are common mistakes that we found, and we actually do them ourselves.
Yeah.
And somewhat useful. If you like this type of content, don't forget to subscribe, guys. That'd be muchly appreciated. Without further ado, mistake number one.
So number one is not using the falling interest rate to pay off your mortgage faster.
So at a certain point, when we started our journey, the home loan interest rate,
it was higher. Yeah, it was about 5-6% when we started.
Yeah.
Yes.
When we first started there, and then it dropped down to like nearly about 2 point something.
Yeah.
Higher twos.
Yeah.
So some people is like, hey, I just pay the bare minimum.
Yeah,
instead of taking.
Because from the beginning, let's say those period around 5 years, and in Australia the interest rate keep going down. So at the beginning, I remember is 5 to 6% one of our properties paying. So we paid the bare minimum, and then the rate keep going down. But what we did not do was, when the rate going down, you should still pay the same amount.
Yeah.
Right, which means you're paying extra into your loan when the interest rate is low, which means you pay off your loan a lot faster.
Yeah.
Why didn't we do it?
Well, for us, it's like, hey, try to pay the minimum because
it's a bonus.
It's a bonus, and you're doing only interest only, and it'll be best for you to do that so that way you can get wealthy quickly.
No, not in our
financially. You'll be better off, or that's how I see in terms of.
I know we shouldn't change. Now the interest rate is going back up. There are a lot of people saying, "Oh, they cannot afford it. They are struggling because they've been paying the minimum of the lowest interest rate." So some of them, they have to sell the property because they cannot afford it. They can't find any way to cut off the lifestyle,
increase their income.
Exactly. So they have to sell it, or it is just struggling. So what we doing now is try to do, if you can, let's say the rate is 6% now. Can you afford to pay 8%? If you can, might as well just pay that extra bit.
Yep.
So for us, we pay, yes, we do pay bare minimum still now, P&I, but when our loan, because we fixed it for 2 years, but when our loan finished, because we don't want to get the penalty for paying extra in the fixed rate, then we pay a big lump sum before locking for another 2 years.
That's it. So every time, like if we have a bonus or something, and we put that aside, once our locked in interest, principal and interest rate, I guess, expire.
Yep.
Then we put that big lump sum into the mortgage, and that draw down, I guess, the outstanding balance. The next following day, we call them up again.
Yeah, lock in the next rate.
What's the next rate going to be? And that way, it's a big lump sum in one hit, clunk, and then lock it in again. Lock it in again. So that's the style that we're using. And for some people, it might not work for you guys, but for us, it's like we just try and minimize as much debt as possible.
Yeah, we just try to pay it off as soon as we can.
So the next one will be losing repayment momentum. This one sort of, sometimes it play tricks on you because yes, you have a big lump sum of money, and then if you don't do something about it, you're bound to be losing the momentum, and you end up going out and spend money instead of trying to minimize or try to tackle that debt. Especially when you have, like, let's say an extra $20,000, $30,000, $50,000 on the side. I'm like, oh, okay, you probably ended up buying something. Some stuff, some shiny object syndrome, let's say. Instead of going back to our first goal, which is paying off the debt.
Well, but not everyone is having the same goal. For us, is paying off the debt. But the less debt that you have is the less burden you have.
Yeah, you can sleep much better actually.
Yeah.
So that's just based on our experience as well, because I think everyone's bound to go off track once in a while.
Yeah, I feel like I don't know if everyone, but feel like us, it's very hard to save a big lump sum of money to purchase a house for deposit, right? Once you're done, you feel like, oh, I achieved my goal. But that's not your goal. The goal, the goal is paid off.
Yeah.
Less than 30 years. So once you save your deposit and then you forgot that, okay, I've been saving, I got a house now, I just pay bare minimum,
Yep.
and then you just spend whatever left over.
Yeah.
No, you shouldn't. You should either pay a bit more or save for something for investment.
Because be mindful though, just because you do have the house, you have the mortgage on the house, effectively that's not yours until such time you pay in full. So because you still got a mortgage, technically it's still
the banks,
the lender, whoever give you that loan in the first place.
Correct.
So it's not yours until it's paid in full.
Yeah, don't forget.
Because if you don't make that repayment on time every time, there's bound to be penalty involved, and if you're late all the times, then they're going to repossess your property.
Yeah, it feels so funny, right? There are a lot of owners. They say, "I own the house. I own the house. That's my house."
Yeah.
Well, you pay 5% only.
You know,
What if you're not paying for a few months? What happened? Not yours.
Is it really yours?
No, it's not.
So be mindful of that trap, because just because you got the bill.
Yeah, you got the bill, and the bill is under your name.
Correct. Property is still under the bank's name.
Yes, correct. And next one is not reviewing your home loan regularly.
So we checked ours every time we do our, every time we do a fixed rate.
Yep.
So
but we did not check before.
No,
never. We just let the bank to roll it, and we did not fix anything.
Yeah.
It was a few years ago. We were quite stressed about our financial situation, so that I was checking the bank tightening the
lending.
The lending requirement or the interest rate, because they worry a lot of borrower cannot repay the repayments. So what they were doing, we were doing, I think it was variable interest only repayment for all the investment properties. So, but then I was checking the rate. I think it was thanks to the Barefoot Investment book. Maybe I can't remember, something like that. I was like, trigger. Okay, why didn't I check it? So I was checking it with the same bank because we couldn't refinance. We were both not working full time. No other bank will lend us a new loan. So I was checking if I do principal and interest repayment together, the amount we have to pay is less than paying interest only on variable. So I called the bank and lock it in for 2 years. One, I pay off because that's how the bank trying to encourage you to pay off the mortgage as soon as possible as well. So I called the bank and lock it in for 2 years, and start from that time, we just checking it regularly.
Yeah, I mean, they do notify you before it actually expire. And then from then, that's when you actually can go shop around. I mean, if you can refinance somewhere else, and if they provide you with a lower interest rate, by all means, why not?
But then the problem is when you go for a new loan, then which means another new 30-year term.
With us, it's not that. For us, it's like we try to quickly pay it off.
Yeah.
So it's not because we want to stretch it for another 30 years or we wanted to have a smaller repayment, let's say. We just try to smash it as quickly as possible.
We're just trying to get somewhere lower interest rate, and then if we can pay the same amount, even more. But because you're paying less interest, which means you're paying your money going to a bigger portion to the principal bit of it. Yeah, if we can. Yeah. We'll see. We'll see if we can apply a new loan, because we're working full time. Right?
I mean, even if you can't do the refinancing, which is what we did, we just call up the bank. Okay, hey, what's the best rate at the current stage?
Yes.
And you can do the bluffing thing. You know, do a poker face. I guess, this bank offered me this. I guess, can you guys match it better? Sometimes, but just one phone call. Yes, it might take you an hour waiting in line, but that just one phone call, a few minutes conversation, you'll be amazed how much money you can save in terms of your interest rate. So the next one will be waste money on add-on mortgage products. So when you first started on your mortgage, when we were started anyway, we was quite gobsmacked on how much add-on that they're providing us.
Oh, they're trying to sell you a lot of stuff. One of our friends, he got a loan, not car loan, but he got the mortgage.
Yep. And then
add on, to purchase a car.
Yeah.
I don't understand the bank. Like, why are you encouraging people to buy something?
The funny thing is, our mortgage broker tell us, kill off all the credit card.
Yeah.
Like, all right, cool, we did that. We killed the whole entire. By the time we sign out the mortgage, it's like, hey, we can provide you with this
more credit.
you know,
yeah,
with
they
the
gave us a big
platinum
credit.
or whatever it was, is like, and the value is like so ridiculous compared to all of our small credit card.
I still remember it's like $45,000 credit.
And I'm like,
no, too much.
You are approved for this. You want to sign it for now? I'm like, no.
Can we reduce it?
Can we actually reduce it as low as possible?
So the bank, they ask you, when you apply a loan, they ask you to cancel all the credit cards because they don't want their money to go into someone else's pocket. They want you to cancel everything. So, and then when, you don't have a credit, we have credit for you. I'll provide you all this money. Give your money to me. That's their strategy.
Yeah. And pretty much like don't get fooled by that, because you can have this offset, or you can have this withdraw equity, withdraw facility, and then this credit card, you don't have to pay this membership, that membership, or whatever it was. I'm like, no thank you. We just want the mortgage.
Yeah, just one mortgage. That's the only thing I want. I don't want anything
else. And even that alone,
else.
I want to pay it off as quickly as possible. And I think I guess the branch manager looked at us a bit weird. I'm like, oh, you didn't want to take this offer?
Yeah, I know.
I think we were the first one or something.
Maybe, I don't know. He was quite surprised.
So overall, like, those are the little tips, I guess, in terms of
mistakes or traps you don't go fall into once you already have your loan. Okay, it's still a long way to go.
The concept of it, just, I guess the main important one is like, hey, yes, you got the mortgage, but now pay it off as quickly as possible
and review it frequently if you can.
So if you like this type of content, guys, don't forget to subscribe, comment.
See you next time.
Bye.
Bye.